accounting is one of the areas where the software that's being used is like Reagan-era software. The consumer and business demand for these professionals is increasing.
Your overall workload is remaining the same or increasing, but your number of staff that are hired and retained to perform that work is either remaining flat or declining. If software could take away a lot of that manual stuff, that should ultimately reflect in cheaper prices, in faster service, and generally positive consumer experiences.
So when people talk about jobs that are disappearing, they frequently talk about things like coal miners or like, physical film editors or even like door-to-door salesmen. But one profession people don't actually talk about that is disappearing as well is accounting. Like, why is that? Like, this is something I know you guys have been looking at. Like, why is this becoming like a less common field?
Yeah, and actually the stat is, I think 75% of CPAs are set to retire in the next decade. The new rate of CPA graduates is nowhere near going to match that. And I think we'd seen another stat that somewhere around 16% of the number of accountants had dropped between 2022 and 2019 to 2022, which is a pretty big drop for the profession. I'd probably point out two big market trends. One, so yes, there is this decline in the number of people who want to become accountants or generally be in the accounting field, which could include bookkeepers and other folks that work in corporate accounting roles. The amount of accounting work and the complexity of tax has only increased over time. So the consumer and business demand for these professionals is increasing. So as a result, you're seeing these firms have a real jam in terms of being able to meet the demand, and even more pressure is getting put on professionals. So that's what I kind of highlight as point one. Point two is even with the decline in the number of professionals and increase in work, it's still a huge, huge market. And so I think the rough stats, there's about 1.5 million accountants and auditors. And then if you broaden that out to accounting related positions, whether it's in corporate finance departments, bookkeeping, payroll, et cetera, there's over 3 million individuals. And that's probably well over $100 billion of spending in wages. So it's huge. And that's a lot of hours of work that need to get done also one way or another. And so I think this is a really interesting dynamic that creates a really interesting why now that people may not know about because it's not a physical industry, but it's definitely something where there's a lot of repetitive manual work that's going on behind the scenes.
At the end of the day, it's a professional service business and it relies upon client service. And so to the extent that your overall workload is remaining the same or increasing, but your number of staff that are hired and retained to perform that work is either remaining flat or declining, there becomes just pressure. It becomes harder for each individual accountant to provide the same level of service to their customer.
And it's something that affects everybody. Like, as you guys kind of point out in your piece, right, as Ben Franklin has said, you've got death and you've got taxes. So it affects every single person. Everyone's got to pay their taxes.
Yep.
You mentioned like professional services. Obviously, this is something that you guys look at a lot in terms of industries that are ripe for AI disruption. So what makes accounting like particularly like a good subject to kind of tackle?
We generally look at professional services verticals that are ripe for AI under the lens of, okay, where are there a lot of highly paid people who are doing, in many cases, repetitive work that probably could benefit from smarter automation. And I think accounting has that in spades. I think one of the things that makes accounting a little bit unique is relative to, let's say, law, which is another vertical we've spent a lot of time looking at. Law is primarily a text-dominated business. So with the current capabilities of LLMs, which are text in, text out, they're very capable at handling a lot of the querying and research and inputs and outputs that the legal profession requires. Accounting, on the other hand, as we all know, is extremely quantitative in nature. You're dealing with numbers all the time. And so what's interesting about it is, while it has those characteristics that make you want to automate it, it's been a little bit slower going relative to its peer in legal services. So, in legal AI, there's this company called Harvey that many of the people listening to this will be familiar with, has grown really rapidly. There isn't really like a breakout Harvey in accounting just yet. And we think about that and talk about that all the time. And we wonder, okay, is that a function of the fact that maybe the models aren't as well suited to accounting on day one? or is something else at play? Are the buying behaviors of these two verticals actually much different than we would have thought? When we examine markets and look for investment opportunities, we often start with something we call a why now, which is, simply put, why is now the right time to invest in this category? And a lot of the demographic trends that we've already hit on, the pace of retirement, coupled with the pace of lack of replenishment, we can call it, creates a lot of urgency to fill labor gaps. These firms from the very top down are feeling tremendous pressure to fill these gaps, not just with additional humans, but really with software. And so I think that makes, relative to other professional services verticals, it makes this one like a really compelling one to examine closely.
So when you guys first wrote this piece about accounting and AI, you guys heard back from like a lot of people in the audience, people who read it, who were interested. What sort of comments were people sending you guys? Like, what were people most interested in or most worried about?
We heard that they were in resounding agreement, I think, of a lot of the themes that we pulled out. They're feeling the pressure internally. They want their firms to be more efficient. They want their people to be happier. And, there's this change of moving from being a doer to a reviewer. And we've talked a lot about that in the past. And these firms want their people to be in more of the review seat rather than the do seat. And that also matches some of the labor trends we pointed out earlier. And so one of the themes, actually, one of the firms we talked to, it's a top 20 firm, they were ready to spend up to $500 million either building or acquiring software because they think this is so important to the direction that the industry is going in.
So if people are interested, what are some of the hurdles, in terms of like implementing a lot of these AI solutions into professional services?
Look, I think it's like very high stakes work that has very limited tolerance for incorrectness. So whereas the more creative fields might benefit from the hallucinations of LLMs and you can create cool outputs with kind of anything that a model gives you back, the contents of your tax return and your financial statement audits just have to be 100% accurate. So I think, while firms are enthusiastic and eager to buy things and be forward-leaning, they are very conservative about what will get rolled out and how quickly it will get rolled out, just to make sure that they're delivering a gold standard that they always have. The second that we talk about a lot is kind of an incentive misalignment or potential incentive misalignment or business model hurdle, which is the accounting industry in general has tended to run on the business model of billable hours. And so if you're coming in and you're trying to sell software to someone that the end result of which is that they can perform their job in 20% of the time it used to take them, if they're being intellectually honest with their customers, then that should in theory reduce their billable hours quite a bit. We think this is like a short-term hurdle. We do think that the way this market will trend over time is more towards a fixed fee engagement, and that just the competitive pressures of supply and demand will make it such that if you can deliver the same work product at a fraction of the cost, then you actually should be billing less. This has like huge implications about who you're trying to sell the software to. We talk a lot when we're diligencing companies about who's your buyer. If you're trying to sell this AI software to like an individual contributor, they might be a little bit skeptical. They might say, I see what you're trying to do here. You're trying to make it so that I'm obsolete. And even though they don't want to do all the manual stuff as much as they ever did, they might think twice. Whereas if you're selling it to their boss or their boss's boss or the firm leadership or something, and they see like the clear ROI opportunity in the business, maybe it's an easier sell.
So the LLMs can actually do a lot within the field of accounting, but what are they actually really good at, as opposed to just something where they're doing like a perfunctory job?
If you stop to think about what LLMs are really good at, data collection and ingestion would be like the canonical example. And what that means in the context of accounting is, if you sit in this client advisory service practice of one of these firms, you're asking your client to give you an export of their general ledger, copies of their bank statements, receipts, PDFs of various contracts they have with various vendors, like all sorts of things that exist in different formats and different systems, and basically translate that into a journal entry into an accounting report. LLMs are really good at making sense of unstructured data. So this is where we've seen them sort of most pervasive in the early innings of this movement. I would say the same goes for research. LLMs, again, excel at text in, text out. So if you're a practitioner and you want, an opinion on how you should treat a certain transaction, or you want to look something up in generally accepted accounting principles, sure, you could do that on Google, or you could do that through one of the more legacy software tools. But Using LLMs to do that, you can get a really robust opinion. You can get citations back on, either like precedent cases or, different ways to think about it. So I think like those first two jobs to be done are where we're seeing the majority of the activity. We're slowly working our way towards the latter two jobs to be done. So report generation and filing, I think, is a little bit more tax specific. And we're starting to see some founders kind of coalesce around rebuilding the tax engine using AI. And then we're still in the very early days of client advisory services and kind of summarizing all the learnings.
So accounting software must have existed in some form. What has it looked like historically? And what is the big gap in terms of what was been missing and what we can do now?
Most companies that had success in the accounting ecosystem really sold through accounting firms. And what that meant was you basically got these large firms and small firms to be your allies in distributing your product. And that would be like the Bill.coms of the world. That would be like Sage Intacct, any sort of general ledger or payment processing type product that the accountants could kind of ask their end users to use to make their lives easier. We still think that's a awesome and effective way of distributing products, but we're excited that now is the first time that a software company can build a very large business just selling to accounting firms as well.
If you looked at the last generation of venture-backed attempts at software, they actually had to have 80 accountants on the team sitting in in a room and turning it into the code, and that was expensive and costly, and it didn't work. Now we're at a point where LLMs can do a lot of that work without needing to hire an entire room of accountants and engineers paired with them to turn the accounting code into software.
It's interesting that there are so many AI developments within accounting, because I feel like accounting is such an old profession. It's been around forever because people have always needed to keep track of their money. And arguably the technology that's gone with it is also super old. So it's funny to kind of make this jump from paper and pen to all of a sudden AI is doing everything
Robots
for you.
doing your taxes.
Yes, yeah. Exactly. Yeah.
But it is also wild that accounting is one of the areas where the software that's being used is Reagan era developed software. Even if you use one of the personal income tax calculation softwares, those have been around forever and they've gotten marginally better. I did some contract work for Intuit 10 years ago, and they were still people buying the CD-ROMs and using those to file their taxes. So the software really hasn't gotten better, both on the consumer or the end user side and for the accounting professional. So I think there's a real time for this to change.
We as consumers should all be excited about this because we already talked about how this is a profession that runs on billable hours. And so all the rote and manual tasks that we're describing, whether it's made clear to you or not, you're paying for that in some capacity. And you're paying someone has a specialized degree and a commensurate hourly rate to basically do that type of work. They also do a ton of highly value additive things on top of it. But if software could take away a lot of that manual stuff and allow them to get to the good stuff, that should ultimately reflect in cheaper prices, in faster service, and generally positive consumer experiences.